Let's jump right in. Suzlon Energy posted a huge 91% year-over-year revenue increase in Q3 FY25.
Yeah, that's a headline that definitely catches your eye. It signals something significant happening with them in India's renewable energy space.
Absolutely. So we've gone through their Q2 and Q3 FY25 earnings calls to really understand what's driving this performance.
And what it means going forward. Our goal here isn't just to read out numbers, it's to pull out the critical insights.
Exactly. We want to give you a clear view of Suzlon's current health and where they might be headed. We'll cover financials, orders, deliveries, management outlook.
The whole picture. And this is really for you, the learner, whether you're investing, tracking the sector, or just curious about a key Indian company.
We'll cut through the jargon and focus on what these numbers actually signify. So our mission today: a clear, concise look at Suzlon's performance and direction, straight from their earnings calls.
Okay, let's start with Q2 FY25 then. Financially, their consolidated revenue hit 2,093 crores.
It was a big step up from the previous year, right?
Definitely. It was a 48% year-on-year increase from 1,417 crores in Q2 FY24. That shows some real business momentum.
And profitability. Did they keep pace?
It more than kept pace. PTE, profit after tax, jumped an impressive 96% year-over-year.
96%, so 201 crores. That points towards, well, better efficiency or maybe higher margin projects?
Could be a mix of both. It definitely signals improved profitability. And backing this up, their consolidated net worth looks strong.
How strong?
It stood at 4,495 crores as of September 2024. That's a solid financial base assets comfortably covering liabilities.
Okay, and their cash situation?
Also healthy. They reported a net cash position of 12,277 crores at the same point.
Which gives them options: financial flexibility for investments or just weathering market shifts.
Precisely. Now let's look at what's feeding these numbers, the order book.
Right. How did that look in Q2?
It was huge. Over 5 GW. They even called it an unparalleled achievement.
5 gigawatts. For anyone looking ahead, that size order book points directly to future revenue potential, doesn't it?
Absolutely. And interestingly, their S144 model made up the bulk of it, 4.7 GW.
Suggesting good market acceptance for that specific turbine technology.
Exactly. And management seemed confident they could deliver on this 5.1 GW total order book within the next 18 to 24 months.
Giving a pretty clear timeline for when that revenue might actually materialize.
Yeah, it provides significant visibility.
Okay, so they have the orders. What about their ability to actually deliver? How were Q2 deliveries?
They delivered 256 milliW in Q2 FY25. Now, that's a big increase from the 132 milliW in Q2 of the previous year.
A significant jump.
It was actually their highest Q2 delivery figure in 7 years, and this was achieved even with the monsoon disruption.
Impressive, considering the weather challenges. And how did that compare to Q1?
Q1 was also strong, slightly higher actually, at 274 milliW.
Okay. Now, what about their view on the wider market? What was their guidance back in Q2?
Initially, for FY25, they were estimating around 5 GW of wind installations for the entire Indian industry.
And looking further out?
Projections were for growth, 6 to 7 GWW in FY26, ramping up to 9 or 10 GW annually after that.
But did the actual installations match that early FY25 forecast?
Not quite in the first half. H1 FY25 industry installations came in lower than expected at 1,476 milliW. But Suzlon still expressed confidence they'd see 4.5 to 5 GW for the full year.
Interesting. Let's break down their business a bit. Where does the revenue actually come from?
Primarily 2 segments, WTG, which is wind turbine generators, and OMS, operations and maintenance services.
Okay, WTG and OMS, how do they differ?
Well, OMS is a big part of their business. They manage about 15 GW of capacity just in India, with really high machine availability over 96%.
And for investors, what's the key takeaway for OMS?
It provides a very stable, high-margin recurring revenue stream. The gross margin there is around 65%.
65%? That's quite high. And the WTG side?
That's where the turbine sales are. The margin is lower, expected in the mid to late teens, but that's where the huge growth potential lies, driven by that big order book.
Got it. And didn't they make an acquisition that impacts OMS?
They did. Renewable. That added about 2.9 GW to their managed fleet, covering wind, balance of plant, and solar assets. It was a strategic move to service turbines beyond just their own make.
Expanding their service revenue base.
Exactly. Though keep in mind, Renewable was only consolidated for about 25 days in Q2's results.
Right. Q2 also had some other big news, didn't it?
Yes, a couple of major announcements. They landed their largest ever single order 1.166 GW from NTPC Green.
A significant win from a public sector undertaking.
Huge. And as we mentioned, the Renewable acquisition marked their entry into multi-brand O&M. Plus, they monetized some assets for 440 crores.
Strengthening the balance sheet further.
Correct.
And what was the general tone from management during that Q2 call?
They emphasized focusing on quality orders, ones with better value and margins. They also stressed their end-to-end business model as a competitive advantage.
Sort of a full-service approach.
Right. The overall feeling was optimistic, with a belief that India's renewable journey was really just getting started.
Okay. One last point on Q2 execution. Any challenges mentioned?
They did acknowledge the severe monsoons impacted Q2 deliveries. Interestingly, they said manufacturing capacity wasn't the bottleneck, but rather the readiness of project sites for turbine offtake.
Site readiness. Okay, that provides good context for Q2.
Exactly. Now let's pivot to Q3 FY25 and see how things evolved and compare.
All right, so finances first. How did Q3 revenue look compared to Q2?
It saw a major acceleration. Revenue jumped to 2,969 crores. That's up 91% year over year.
91%. And compared to Q2's 2,093 crores, that's a substantial sequential increase too. Shows the momentum building.
Absolutely. And that flowed straight through to the bottom line. Q3 PIT hit 388 crores.
Wow, almost double Q2's 201 crores.
Right, up 91% year over year and a very strong 93% quarter on quarter increase. The profitability trend is clearly improving sharply.
And the balance sheet. Did that continue to strengthen?
It did. Consolidated net worth rose again, reaching 4,914 crores by December 24, up from Q2's 4,495 crores. Consistent improvement there.
Net cash position.
It dipped slightly to 1,107 crores from Q2's 12,277 crores, but still very healthy overall.
And crucially, what about year-to-date deliveries?
That's a key point. For the first 9 months of FY25, they delivered 977 milliW. That already surpassed the entire FY24 total of 710 milliW.
So strong execution for the year already locked in by Q3.
Definitely shows they were ramping up significantly.
Okay, let's look at the order book again in Q3. Did it keep growing?
It did. It hit a new record high of over 5.5 GW, up from the 5 GW plus reported in Q2.
So the strong order inflow continued. People kept placing orders.
Yes. And the S144 model became even more dominant, exceeding 5 GW of the total book, up from 4.7 GW in Q2.
What was the final split they reported?
The outstanding book was about 92% S144 and 8% S120.
And the really big news regarding the order book.
The visibility. They stated they are entering FY26 the next fiscal year with orders covering the entire year's expected execution.
That's unprecedented revenue visibility for them, isn't it?
It really is. Plus, they mentioned another 1,100 milliW of projects in advanced development, not yet in that 5.5 GW figure, which they expect to convert in the next 3 to 4 quarters.
Adding even more future potential. Okay, now, did their view on the overall industry installations change between Q2 and Q3?
Yes, there was a revision downwards for the current year, FY25. The industry forecast was lowered to 3.54 GW.
Down from the roughly 5 GW estimate they mentioned in Q2. What drove that?
It seems to reflect the ongoing execution challenges across the sector, things like getting transmission infrastructure ready and securing land. These are industry-wide issues.
But did their longer-term view change for FY26 and beyond?
No, that remained pretty consistent. They still see around 6 GW for FY26 and then 7-8 GW annually from FY27 onwards. So the long-term optimism is still there.
Okay. And despite the industry headwinds, how were Suzlon's own deliveries in Q3?
Q3 was a record breaker for them. They delivered 447 MLW.
447 LW. That's a huge jump from Q2's 256 MW.
Massive. It's up 163% compared to Q3 of the previous year. It really indicates a significant improvement in their own execution capability.
That's a key trend, improving execution despite industry challenges. What about segment performance Q2 versus Q3? Renom's impact.
Right. Renom was fully baked into the Q3 results, unlike Q2, where it was only partial. We also saw the WTG segment contribution margin improve.
How much improvement?
For the first 9 months of FY25, it reached 22.7%. That suggests better profitability in the core turbine business compared to what was implied back in Q2, which was more mid to late teens.
That's a positive sign. Any changes on the cost side?
Yes, depreciation increased in Q3 to about 65 crores. That's partly Renom's full consolidation and also ongoing capacity expansion investments. Interest costs also ticked up to around 70 crores in Q3.
Understandable with growth and acquisitions. Any other notable announcements in Q3?
They highlighted becoming a member of the UN Global Compact shows an increasing focus on ESG aspects.
And the management tone in Q3. Still optimistic.
Even more so, I'd say. The commentary in the Q3 call felt more confident. They used phrases like exponential growth and talked about having shifted into high gear.
Reflecting that record delivery number, perhaps.
Likely. There was also more emphasis on securing high-quality orders, not just for FY26, but beyond, showing a longer-term strategic view.
And finally, on execution in Q3. Any updates on tackling those bottlenecks?
Well, the record deliveries themselves suggest things were easing. Management specifically mentioned prioritizing orders where land was already secured upfront.
A practical way to mitigate delays.
Exactly. And they expressed an expectation that these land-related issues industry-wide should ease significantly in FY26.
Okay, so let's try and pull this all together. Key takeaways from looking at both Q2 and Q3.
Well, first, Suzlon showed really strong financial performance across both quarters, but Q3 saw a clear acceleration in both revenue and profit growth. That trend is undeniable.
And second, that order book remains incredibly robust. It provides, well, substantial revenue visibility for the next couple of years at least.
Definitely. Third, while the wider industry still faces execution hurdles, especially around land and transmission.
Suzlon themselves showed a marked improvement in their own deliveries in Q3. That's a crucial difference.
Yes, and they're actively implementing strategies like prioritizing land-ready projects to manage these issues, expecting things to get much better in FY26.
Fourth takeaway. Profitability metrics are heading in the right direction, particularly that WTG contribution margin improvement we saw by Q3.
Right. And fifth, they're making strategic moves, renome, asset sales that strengthen their overall position for future growth in the renewable sector.
So even with that slight lowering of the near-term industry forecast for FY25.
The long-term outlook for Indian wind energy remains very promising, and Suzlon looks well-positioned to be a major beneficiary.
Absolutely. The comparison between Q2 and Q3 really highlights that positive momentum. You see the strong financials, the massive order book, and importantly, the improving execution.
Yeah, the sheer size of those orders, over 5.5 GW by Q3, and the big jump in deliveries despite industry issues, those are really significant indicators of their potential.
So for you, the listener, understanding these trends offers valuable context on the Indian renewable energy scene, whether you're looking at it from an investment angle or just keeping informed.
It paints a compelling picture.
It does. So here's a thought to leave you with. With such a strong order pipeline and execution seemingly getting smoother, what's the next big catalyst for Suzlon? How can they potentially capitalize even more on India's wind energy potential beyond this current trajectory? And maybe what new challenges might emerge as they continue to scale up?
Good questions. Something definitely worth considering as you continue to follow this dynamic company and sector.